Good afternoon, everyone. We are happy you could join us for Bigbank Investor Webinar. Today, we are hosted by Bigbank Chairman of the Management Board, Martin Lenz, and the Member of the Management Board, Argo Gilsman. We will start the presentation with an overview of Bigbank and its public offer of subordinated Tier 2 bonds, and continue with a live Q&A session. If you would like to ask questions during the presentation, please use the Q&A section underneath the presentation. But now I am handing it over to you. So please.
Good afternoon also from my side. Nice to see you all here. Here together with me is also Argo Gilsman, as said already. And I will give you an overview of our new bond program in total amount of 30 million euros, out of which the first emission is now happening, and we will issue in minimum 3 million euros of bonds, and in maximum amount we can increase this to 10 million euros. But for the start, also a small disclaimer. This presentation here should be taken as an advertisement, and your investment decision to invest, not to invest, or how much to invest should be based on the prospectus, on our financial reports published through the Nasdaq system, or also available on investor.bigbank.eu page, and or also including all of the official announcements done through the Nasdaq system. The bond offering is happening in Estonia, Latvia, and Lithuania. This material should not be distributed to US. During this presentation, we are also using forward-looking future statements, but they should be not taken as guarantees. These are as we see the things at the moment, but based on this information or also our historical performance, we cannot guarantee that everything will be exactly in the same way in the future. Couple of words also about myself. I'm Martin Lenz, Chairman of the Management Board, being on this position from 2019. I have been working in the bank since 2013, and throughout this time I have carried different roles and responsibilities. So I believe that if you have any questions, I hope that I can give you also adequate answer, regardless what this question is about. And Argo, maybe a few words also about you.
Hello, my name is Argo Gilsman. I have been working in Bigbank for over 11 years. Also, I've been in different positions, and my cup of tea is finance, meaning that I can cover the questions and also topics regarding the financial part of Bigbank. Since 2017, I'm head of finance area, CFO, and since 2019 also member of a management board. Thank you.
Thank you, Argo. But to start, a small overview of also geographical picture. As you can see, Bigbank is operating actively in 9 countries: Estonia, Latvia, Lithuania, Finland, Sweden, Germany, Netherlands, and Austria, and also in Bulgaria. Our total assets at the end of third quarter were over 2 billion euros. We have a loan portfolio over 1.6 billion euros, and deposits almost 1.8 billion euros at the end of third quarter 2023. Our customers are serviced by all in all 491 employees, and we have 146,000 active customers. The bank is owned by two private individuals, Mr. Parve Pruunsild and Mr. Vahur Voll, who both own 50% of the shares. The bank is registered and has a credit institution license from Estonia. Our supervisory board consists of 5 members. Chairman of the supervisory board is Mr. Sven Raba, and then members of supervisory board are Mr. Vahur Voll, Mr. Andres Koern, Mr. Jaan Liitmäe, and Mr. Juhan Jääger. The bank operates in Latvia, Lithuania, Finland, Sweden, and Bulgaria through branches. But as said before, we do also operate in Germany, Netherlands, and Austrian market. And on these markets, we operate under the cross-border license, meaning that in these countries, we cannot have any physical employees, but people from these countries work from our offices in Estonia. Then we have also some subsidiaries. The Rüütlimajad Group is servicing the bank's real estate investments. We have different investments, both in commercial real estate and also agricultural land, which is rented out and where agricultural activities are being done. There are also 2 more subsidiaries. Balti Võlgade Sissenõudmise Keskus was dealing with debt collection activities. At the moment, it does not have active operations. And also here is one daughter company in Latvia, Balti Saugumas Group. If to mention also some important facts, if you have been following us for some longer time, you know that at the end of 2022, we stopped issuing new loans in Bulgaria, but we were still servicing our existing loan portfolio and issuing deposits. And now we have decided that beginning of next year, we will again start issuing new loans. The reason for that being that when we did this decision, we were in short of additional capital. We were starting the first bond programs, and we had to do decisions which are the more profitable markets, which are the more profitable products. And based on that, we did the decision to stop growing the loan portfolio in Bulgaria. Now we see that in the current macro environment outlook, where there is somewhat a slowdown in the market new sales, we still want to grow, and part of this growth will be also new loan issuing in Bulgaria. If we look at the bank's product portfolio, then we see 2 business lines, retail banking and corporate banking. For the retail customers, we offer different types of loans, starting from consumer loans, housing loans, hire purchase products, also a credit card, which can be used also as a payment card. We offer private leasing in Lithuania, and also deposit products, either classical term deposits or also saving deposits, which are a type of a product where you can earn rather sufficient interest, but you have the ability to take the money out within 3 days of your wish. In term deposit, you will fix the money by the term you plan to make it. And for the corporate customers, we offer different loan products, investment loans, credit lines, development loans, but also some unsecured small loans. We do offer both car and equipment leasing, and also the corporate customers can make like term deposits or saving deposits in the bank. If I look at the longer history and timeline of the bank activities, the company was started in 1992. We got the credit institution or banking license in 2005. I believe one remarkable step was also starting the cross-border services in Germany in 2009, after which we have also established the services in Austria and Netherlands later on. We changed the business model of the bank in 2014-15, where before we were giving out more riskier loans, but from that time we are competing more with local universal banks. In 2019, we entered the corporate banking segment. In 2020, we launched also housing loans. And in 2022, we got the Moody's long-term deposit rating of Baa3 to Bigbank deposits. We launched the credit card product and also had our first T2 bond issue on Nasdaq Baltic bond list. In 2023, we have also had different bond issues, but I would also mark the milestones of launching saving deposits in Estonia and in Finland. But Argo, I think it is also time to talk a bit about the numbers.
Yes, thank you, Martin. So let's go over the most important financial figures. And let's concentrate first on the right side of the screen where the big numbers are. These numbers actually show that Bigbank has continued its growth very well in 2023 first 9 months. Plus 29% is a figure how much our loan portfolio has increased within exactly 12 months time. Considering year versus year comparison in 2022, our loan portfolio growth was even over 50%, 51%. So in percentage wise, the growth has, let's say, slowed down, but actually in absolute numbers, it is still pretty remarkable numbers, and we are really happy about that. Regarding assets, yes, over 2 billion, excuse me, right now already, and the growth is there also plus 38%. Most important asset, of course, for us is a loan portfolio, which is behind this growth, but also our liquidity buffer has increased a lot. Compared year versus year 2022, the growth of total asset was 43%. The third big number, plus 19%, shows how much our net interest income has grown in 9 months' time this year compared to 9 months last year. Yes, the figure is somewhat smaller than the asset and loan portfolio growth figures, but here are pretty simple reasoning behind it, meaning that our strategy has been now concentrate more on housing loans and corporate loans. We will see soon enough these comparisons as well, how these have developed. But it means also that our interest income from these products will be and are smaller, and this means that the smaller growth compared to the loan portfolio growth is a very logical solution here, and we are really still happy about this growth here. If you look for all these numbers on the left side, there are 2021 annual results, 22 audited annual results, and 9-month comparison of 2022 and 2023 following these. From the second block, where we see this profit and loss statement figures, let's concentrate on this net profit row, the last row. Where we can see that while in 2022 we actually got 33.7 million euros net profit, then already in 9 months this year the number is 29.4 million euros. So it means that we are already very close to last year total result, and it means that there is a high probability that this will be a record profit year for us in 12 months comparison this year. What we are looking ourselves very carefully, and this is also one of our key metrics because our strategy also says that return on equity ROE will be 20% by the end of our strategy period in 2026. We see that in last year the figure was 17%, but in 9 months period for this year it has grown to 17.7%. So improvement also there. Yes, we are not there with a 20% where we want to be, but it is, let's say, meets our expectations, and we are on our way to meet our strategic goal as well. Our loan portfolio overview. Yes, we have exceeded the 2 billion euro milestone in total assets, but the loan portfolio out of it is 1.6 billion euros. The distribution geographically seen on the left up corner, where we can see that our most important markets are Estonia with 42% and Lithuania with 34%. Next is Latvia with 15%, and then following Finland, Sweden, Bulgaria. Considering how it distributes between retail and corporate banking, the corporate banking part is constantly growing after the strategic decision was made, and now it has reached 36% threshold, and it is constantly increasing, so more coming there than in retail banking. But both business lines are actually increasing, but growth is just bigger in the corporate side. The third upper pie shows actually how loans are distributed between different collaterals, and where we can see that 51% from our loan portfolio is already secured with real estate. And real estate is security mainly for also corporate loans and housing loans. 39% is unsecured loans, mainly consumer loans, and then the rest is much smaller percentage already. And below, you can see the growth numbers once again, but the comparison is a little bit different. Below left side is that how much growth has been in loan portfolio in 2022 compared to 2021, and how much it has increased now in 9 months' time compared to the end of last year. This growth has been 19%. Below and in the right corner, you can see our loan portfolio quality metrics. And here you can see that until 2022, actually, the loan portfolio quality constantly improved. Even in the previous years, it was even, let's say, worse, and it improved until 2022. Now we can see that in 9 months' time, 2023, there is a slight worsening. But here the main reasons actually is not so much the quality issue at how much percentage-wise the loans go in default, but rather the question that we do not sell as much our defaulted loans this year like we did the year and years before. So this is the main reason behind this increase here. But still, not working loan portfolio percentage is below 3%, which is historically for ourselves very good number and also meets our expectations. So we do not see any big problems regarding the loan portfolio quality today. How we are financed? Mainly by deposits, and deposit are distributed to 2 different main products for us: term deposits, saving deposits. Martin described the difference between these 2 products already, but we can see that the saving deposit, which is yes, with smaller interest rate, but which gives customers more flexibility using the money, and which is why actually in this, let's say, turbulent times, people more and more go into this product. And we can see that the growth numbers in this dark blue part of columns, which is savings deposits, has been grown much quicker. And now by the end of September this year, actually the savings deposit portfolio is already basically in the same size like our term deposit portfolio. So roughly 50-50. How deposits are distributed geographically? Here, the main part comes from our cross-border countries, 54% from Netherlands, 30% from Germany, and 4% from Austria, which means that in total, 88% from cross-border countries, and our loan market countries actually give 12% of our deposits. Biggest part from Finland, rests are smaller. In Finland and Estonia, yes, we started to offer savings deposit this year as well. And actually there is a pretty cool trend there, especially in Finland, where we can see that we can definitely increase the Finnish deposit portfolio and also a percentage of a total geographical distribution quite nicely with this new product there. Regarding maturities, yes, almost 50% savings deposits, and the rest, majority of maturities are less than 2 years or 2 years, up to 2 years, meaning that deposits with maturities longer than 2 years only consist of less than 10% of our total deposit portfolio. And with that, I will give word over back to you, Martin.
Thank you, Argo. Time to give you also an overview of our strategy. We are still a growth-oriented, customer-focused bank, which aims for 20% return on equity, as also Argo already mentioned. The strategy is valid until end of 2026. And we also do believe that despite of the current economical situation, the bank is able to grow. And that is also the reason why we want to acquire additional capital. If you look in the first pillar of our strategy, then our loan portfolio is expected to grow primarily through housing and corporate loans. The reason being that these loans are having often longer maturities and also larger loan sums, which help to create efficiency and also give the bank sustainable and long-term interest income. How we plan to win in these product segments is that first of all, we do believe that it is vital to provide the customers with the reasonable product conditions, and these not only being the interest rate, but also the small print, the covenants, because what we often do see is that different people or companies put the conditions that don't help to mitigate the risks, but make the customer's life more complicated. So we really focus on becoming the risk leaders, but not from the perspective of taking the biggest risks out of all the other banks. No, the point is that we really want to understand the risks, what we take and how to mitigate them, and take really this personalized approach. Is it then being a private person buying a new home, building a home, or is it a company establishing a new business, doing some real estate development or making some investments? We are also looking for different underserved customer segments. One of the examples is our housing loan product, where we have this special schedule, so you can postpone the principal payments up to 20 years. In Estonia, it means that by the Estonian bank regulation, the housing loans must be repaid within a 30-year period. It means that 20 years you can pay only, for example, interest, and last 10 years interest plus principal payments. And in this customer segment, we see two types of customers. One of those are the customers who are like an investor type of a profile. So they do consider that instead of making the bank back the principal payments, they will use this money somewhere else, and they consider the price of this money, meaning that you need to pay on that the margin plus the Euribor, and if they can earn somewhere more, for example, with this money, then they use this money in their some investments or other projects, and then they pay back the kind of full loan at the end of the period with then scheduled payments. But the other type of the customers are the ones who buy a new home or build a new home, and they take this special schedule, meaning paying only the interest rate for the first few years, and they use this money from the perspective of paying not the principal for example, buying the new furniture to the flat, or have a safety buffer in case some unexpected bigger expenses will occur. And last but not least, in this pillar, of course, it is important to provide also the customers with excellent customer service, which should be also fast. And this is the place where we really focus on being faster than our competitors. Either it is giving decisions in housing loans or giving decisions in corporate loans. And also it sometimes means that we need to say no to the customer or give a negative loan decision. But what we do believe in is that also when giving a negative decision, it is better to do it rather quickly for the customer, not spend weeks or even months, so that the customer does not know whether I will get this loan, don't get this loan, and actually kind of this then after, I don't know, 3 months you give a negative answer, and actually the customer is very disappointed. So we both in positive loan decisions, but also negative loan decisions, try to be rather fast. The second pillar in our strategy is about taking into use the internal risk-based approach for the capital requirements for credit risk. What it means is that today we use the standard method, and it means that all of the loans in one or another product segment, which according to some rules have a standard capital risk weight. For example, for housing loans, 35%. And with IRB, this capital risk weight could be minimum 10%. In Estonia, the Estonian Central Bank has established a minimum threshold to 15%. But now, if we have a good customer, good collateral housing loan, and in case we could use with the IRB approach 15% capital risk weight, but we use 35, then it means that actually we could earn the same capital return with much lower margin, for example, but we cannot do it in the standard method. At the same time, of course, if you don't have a good collateral position or you don't have a good customer, it might be also that the risk weight is much higher than 35% in case of the IRB. So what it means for us is that for sure, before taking it into use, we need to kind of be sure that our product portfolio is acting accordingly. We have certain thresholds. And from other side, it also means that we need to build up a full system for that. This is a regulated activity, and it is so to say licensed. So kind of the regulator must give you an approval, and before giving an approval, you need to prove them that you have used the same methodology in parallel for 3 years, after which they control if everything is working appropriately, and if they believe that everything is fine, they will give you also the ability to take this approach into use. The third pillar of our strategy talks about our real estate investments, which help us to increase the capital increase, but also support the business from having a good knowledge what is going on in the real estate market, what is going on in the agriculture. So as said in the beginning of the presentation, we have both commercial real estate investments, but we also do have agricultural land investments. And regarding these investments, we also consider investments into green energy. On our land, we also today have some windmills producing electricity, and we have also plots which are on the windmill planning areas, meaning that in these areas, new windmills can be built and taken into use. And we have signed different cooperation contracts in order to do it in the future. Last but not least, business pillar of our strategy is entrance to daily banking will tie customers, improve marketing efficiency, provide cheaper financing. So what we do look for is to establish a long-term relationship with the customers. Today, for example, if we talk about the consumer loans, they are often taken, for example, for the 5-year or 7-year period, but repaid already often much earlier. And you need to kind of establish again a new relationship. Or for example, if this customer does not take a consumer loan, then you will lose this customer. In everyday banking, you will have a continuous relationship with the customer, and we already do see with the first payments products. As said, we have also launched the credit cards that they are used quite actively, and on a monthly basis we already have more than 15,000 credit card payments happening. This is testing out our systems, the ability for the systems to work 24/7, enable the payments whenever or wherever you are in the world. And also the saving deposit product, out of which 50% of our total deposit portfolio consists of, is actually quite close to the demand deposit or a current account where the money can withdrawn or where the money can be transferred to somewhere instantly. So this is something what we are today building up. And of course, one of the reasons also there is to think that if you have a strong customer base, you can cross-sell different products. You will have, for example, younger customers who are using more the lending products. You have older customers who use more different saving products. All of them, of course, in the future can use some different payment services. And also what is common in the banks is that for the money on the current account, the interest paid are rather low, even in the current interest environment. Of course, the interest environment is changing and having different kind of waves. But in the long term, we also believe that having a strong everyday banking customer base with their salary money on the current accounts also provides the bank with cheaper financing. If we look the last green pillar, then there are also some long-term objectives important for us. We do attract and keep talents through great leadership. What we do want to establish is that every employee in Bigbank would have a best manager. And the good manager, in our opinion, is the one who develops his or her people, supports them in achieving their results, sometimes being as a coach, sometimes being maybe demanding, and sometimes also pushing for the higher highs. We do build a sales and business-oriented organization culture where is high banking competence and knowledge. We don't want to be just a bureaucratic organization which is operating in a highly regulated market. We want to be as a bank which is at the end of the day a business organization, but who does business in highly regulated market. And you need to understand it, you need to follow the rules, but still you are doing the business at the end of the day. We, of course, are very appreciated about our Bigbank brand and trying to keep it very trustful, recommended. We mainly grow organically, but we also consider non-organic growth. We do use scaling to spread current products to existing and new markets. Few years ago, we built a new banking system, Nest, and Nest is a platform which enables us to, first of all, launch new products rather quickly. We usually launch them in one market, then test them out. If they're working, then we can also scale them rather quickly compared to our competitors, to our other markets of operation. We use lean and technological solutions to develop processes that create a good employee and customer experience to reach our high business goals. Regarding climate neutrality, we take it rather as an opportunity, not a restriction. And we do improve also the cost efficiency, because if you want to have a high capital return, then the organization and its processes must be efficient. So this was the quick overview of our business strategy. And if you will have also any questions regarding that, feel free to fill in the questions in the Q&A, which later on will be also answered. But Argo, maybe give us an overview of our bond issue.
Excuse me. Now, technical problems, but now we are here. Yes, let's go over our bond program terms. So it's a 30 million euro program, and the first series what we are issuing right now is minimum 3 million euros, which may be increased up to 10 million euros. All other terms are actually pretty similar to our previous program. This has a nominal price of a bond of 1,000 euro, coupon rate 8%, interests are paid quarterly. It is a subordinated bond with a term of 10 years, but with an option to redeem it after 5 years. What it means is that actually after 5 years, we cannot use this bond anymore fully as a part of our T2 capital, and it means that it becomes over time after 5 years kind of more expensive for us. So there is a probability that bank will redeem these bonds earlier than the 10-year time what it has officially, but we cannot of course promise it and we don't do it. So it is a 10-year bond with an option of redeeming it early after 5 years time. Yes, 8% interest rate is also the same like we had in our last programs. Actually, we think that this is still a very interesting interest rate considering today's environment, where interest rates start to drop in some moment next year, most probably. And also considering the fact that actually our issue size is not a very big one. It is a maximum 10 million, minimum 3 million euros. And also here gives us confidence the fact that our last issues are being traded in Nasdaq Tallinn actually over the nominal value, meaning that there is interest with such rate bonds up there in the market. And also, actually, one important factor is that we don't want to create a situation where actually the subscription of this bond will be, let's say, tens or even more times higher than the total volume can be. And then we kind of disappoint our investors with a solution that we only give a fraction of what they intended to invest into to them. Meaning that considering all these facts, in our opinion, this is a very interesting and still viable interest rate what we offer. Where do we use these bonds? Simple answer is growth. And our strategic goal to increase our corporate and housing loan portfolios needs additional capital. And this is the main part where we intend to use these additional bonds as a part of T2 capital. Yes, we also state that we may use partly or some part or even up to 5 million from this bond series as paying back previously issued bonds. But this is not a promise, this is just an option, and the decisions will be following regarding that regard later on. And to take one more thing out, we do it as we did last time this way, that we offer these bonds in Estonia, Latvia, and Lithuania. So all three Baltic countries investors can subscribe and be part of this option. With that, I think I'm done with terms. And this is actually the last slide what we have. So now we are ready for questions if there are any.
Thank you for the presentation. Indeed, let's see if we have received any questions. Currently, it seems that we haven't. So everyone, please take a minute to think whether you do have any questions or not. Meanwhile, I will make an overall conclusion and say that if you have any questions later on today or even during next week, please contact Bigbank by sending an email to investor@bigbank.eu. And also the recording of the webinar will soon be available online. Further, please follow Bigbank announcements to stay up to date with company's news or visit Bigbank's investor page, investor.bigbank.eu. So it seems that we still haven't received any questions. On my behalf, I would like to thank everyone for the time spent together today, and maybe you have some final words to say.
Yes, thank you for all of the participants for taking the time to listen to our presentation. I hope that we gave a sufficient overview of Bigbank activities and current bond issue. And as said, if you have any further questions, don't hesitate to contact us directly. We will try to answer all of our questions as quickly as possible. So thank you all.
Thank you.